Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Chan, you're watching Indian Open. Let's go straight to the headlines. The Reserve Bank of India announces dates for the next two rounds of long-term repo operations. 3-year auctions for 25,000 crores each will be held on the 2nd and the 9th of March. The banking regulator also lifted certain restrictions on Bandhan Bank, including that of branch expansion after the lender partially complied with promoter shareholding norms. Vodafone Idea lost over 36 lakh customers and Airtel lost over 11,000 in the month of December. Reliance Jio, on the other hand, added over 82,000 subscribers according to TRAI data. Northeast Delhi continues to be engulfed in violence as mobs pelted stones, committed arson and threatened locals. The death toll climbed to 11. And of course, while all of us are worried about that as well, I think the bigger worry continues around the world to be coronavirus. It's not impacted India as much, but yes, around the world there are issues. Look at what the Dow Jones has done, and the markets are reacting duly. So let's look at the trade setup for the day. The Dow was down about 3% in Friday's session, and therefore the total toll over the last two sessions is nearly about 1,900 points, and that's not a normal feat. And by the way, by virtue of this and the correction that we've seen in the Dow, S&P and the Nasdaq, the markets, those markets now trading at the lowest level since October 2019. That tells you about the kind of drop that the last 2 or 3 days have had and the resultant impact on levels as well. The sharp cuts seen on S&P 500 and Nasdaq as well, and the yields are correcting. People are favoring safety, and the 10-year yield in the US is at record lows. That tells you about the kind of shift that investors are making around the world. I mean, we've seen these outflows happening from India as well. But what I'm trying to say is that largely around the world, you're actually seeing this retreat to safe haven. And why not? Because this is just so unpredictable. The Asian markets too have started off, you would have to say, with a bit of pain. Nikkei at least is down about 1.73%. Maybe the Dow future is doing mildly okay, and therefore Shanghai or whatever else is not as that bad. Kospi, by the way, was down in the session as well. The won has retreated. Hang Seng is down about 0.8%, and the SGX Nifty indicates a start, which is down about 0.81%. So there is a bit of weakness in those in the SGX Nifty indications as well. And across the Asian screen now, earnings cuts are now starting to come in. Not surprising, really. Maybe they should have started earlier by virtue of the fact that almost everybody's talking about how supply chains and production and demand have all taken a hit, and which is why this chart shows how this virus outbreak has spurred the earnings divergence between the Asian screen and the rest of the world, because Asia clearly is at the epicenter of all of this. Now, the problem, as I see from an Indian market perspective, is that we are very close to some key technical levels. With what the SGX Nifty is indicating today, and at a point of time, it was indicating a start of 11,685. That's a stone's throw away from the budget day low of about 11,633. And if indeed we break those lows, then we have a palpable issue at hand. So you got to keep that at the back of your mind. You got to keep that at the back of your mind that global cyclicals, exporters, which have been weak for the last few days, might continue to put pressure. So you will have the likes of Tata Motors, Vedanta, etc., all continue to remain under pressure. And India VIX, which has also shown some signs of moving up over the last few days. Yesterday was a different case in point, but day before yesterday had a big spike. But just looking at the fact that we are nearing the expiry, as well as the CBOE VIX moving past 30 in trade yesterday on an intraday basis, might just lead to a bit of a spike on the volatility as well. So brace for volatility is what you would have to say. One doesn't quite know how the index will shape up during the course of the day. If indeed Europe follows the US market cues and the Dow futures cues, and if indeed all of that spurs some buying, then you don't know. But otherwise, the stage is not set for green on the screen. But let's wait and watch. What about specific companies, and what should you do in a scenario like this? So the telcos is something, and we'll talk about this in detail, but I just want to mark the two standout points that happened. Vodafone Idea lost 36 lakh subscribers. That's a big one. And we'll talk about that just moments from now, so I won't dwell too much on it, but just keep these numbers in mind. It's lost 36 lakh subscribers. Jio has added 82,000 subscribers for the month of December. So that's the latest TRI data for the month of December. IRB Infra, and yesterday was a piece of good news for them. Today they got some fund infusion, and then overnight they've declared about this letter of acceptance from MSRDC for the Mumbai-Pune Express and the old Mumbai-Pune Highway. They'll pay about 8,262 crores for 10 years and 2 months odd, but This should be viewed positively for RB Infra. And I think the biggest stock of the morning, on the positive side at least, could well be Bandhan Bank, because there's a conditional relief from the Reserve Bank of India. They need to open 25% new branches in unbanked rural areas and move to support growth, liability franchise as well, as per Goldman Sachs. But the fact is, even though it's conditional, now that Bandhan Bank has the permission to open more branches, this is arguably the biggest piece of positive news that Bandhan Bank has gotten for a while. The stock will likely react. India Cements had a big reaction in trade yesterday already. The name of Radhakrishnan Damani's brother, buying about 2.8% stake at about 82, spurred this interest. One reckons that maybe the interest could continue. Cement is not in a bad spot. Let's wait and watch if India Cements reacts further in the session today. And lastly, from among stock-specific news, Morgan Stanley has raised the target on State Bank of India. Now, that's one PSU bank that's continued to rise over the last few weeks, maybe in anticipation of a good SBI Cards IPO, but Morgan Stanley has raised the rating to equal weight, price target raised to 375. They believe the subsidiary level performance of some of the SBI subsidiaries is doing well, and valuation roll forward to next year leads them to up the price target. Let's see if SBI reacts. Lastly, just keep at the back of your mind, the big news also from one market perspective is the RBI has announced the second round of the LTRO, so 3-year LTR auction for 25,000 crores to be held on March 2nd and March 9th. The first round of the 3-year and the 1-year paper saw some very good responses. Let's see if the next round also gains positive response. One would presume yes, but let's see the quantum of bids that come in for both of these as well. However, let's tell you what's lined up on First Word today, the collection of the top editorial stories that we want to bring to you. Darshan Mehta will take a deep dive into the telecom subscriber trends for the month of December. CRIF, High Mark Credit Bureau, has analyzed the spike in stress for microfinanciers due to communal tensions. Shefali Malik will get us the takeaways from that report. Avenue Supermarts, or D-Mart, commands a steep premium in equity markets. Agam Wakil will tell us why and the way ahead. And despite the market rout, analysts see upside potential in a bunch of stocks. Yash Upadhyaya brings us that list. More and more subscribers are choosing to move away from Vodafone Idea. The telecom operator lost more than 36 lakh users in the month of December, according to the TRAI data. Darshan is here to take us to the details. Darshan, I'm still on Vodafone. I don't know about you, but I think a lot of people chose to stay away. Yeah, so even I'm on Vodafone, but at this point of time, not thinking of shifting. But it's surprising, 36 lakh shares, but less surprising considering they lost 3.6 crore subscribers in November. So the trend certainly seems to be there. And the big gainer certainly seems to be BSNL. They gained in almost 4 lakh subscribers. Airtel was down, Jio gained marginally. Overall, there seems to be a big churn on the industry. Almost 31 lakh customers have already moved out of the industry. So the trend certainly seems to be on the negative side, and the other companies would be the gainers here. But obviously BSNL and Jio are the gainers as far as the numbers are concerned. Now, if you're looking at the gross, now since the December number has come out, we have data for the entire quarter. Now, overall, it's been a good quarter as far as the gross revenue is concerned, because that has actually risen 9.3%, and it's the highest growth in the last 19 quarters. And that also comes in because of the tariff hikes that most of the companies have taken, and the freebies and the discounts have stopped. So on the revenue front, yes, it's good for the telecom industry, and you've seen the stock prices of how Airtel and Reliance have moved of late. Now, in terms of the revenue market share at this point of time, Reliance Jio still continues to be the biggest one, 35% market share, and then comes in Bharti Airtel with 32%. Vodafone Idea continues to lose. They are now down at 26%. Now, as far as the broadband number is concerned, it's certainly Airtel which has done well this time around, though most of them have managed to lose market share. Airtel has gained in almost 4.8 lakh shares, customers. The others certainly have lost. So overall, I think if you're looking at it on the revenue front, it's good for the telecom industry, and the big winners obviously is Airtel and Reliance Jio, while Vodafone continues to lose. The surprising bit is BSNL's upsurge, right? I mean, one would have never thought that this would happen, but what is turning out to be Vodafone's loss in some fashion is also turning out to be BSNL's gains. The last time, at least I may be wrong, but I don't remember, Darshan, the last time that BSNL added over 4 lakh subscribers. Yeah, that's very, very surprising, and that's why we put it out, because usually we compare the listed companies, but BSNL certainly has done well for itself this time. Okay, Darshan, thanks so much for putting that into perspective. So that's the latest TRAI data. And I think people would, I mean, right now the calls on a Vodafone Idea price is not about what's the kind of subscription numbers that they get on month basis. It's all around survival and how do they pay the AGR dues, and is there a relief that comes about or no. It's just been decimated so badly. But the key point is that the quantum of losses of subscribers from Vodafone Ideas stable make it very difficult for a sustainable earnings recovery of sorts for the company over the course of the next 6 to 12 odd months, with the presumption that all fares well for the survival of the company. You just got to question that, right? I mean, losing 36 lakh subscribers in a month is not something that you would scoff at or just let go, and that would certainly raise an eyebrow or two. But let's wait and watch. It's such a small stock and it moves so much on the news surrounding any kind of relief that I don't quite know how much it will move on the basis of this loss of subscriber data that has come out for the month of December. But let's wait and watch. Airtel's loss has been marginal. Jio's gain to the overall numbers is not as great. 80,000 crore subscribers is great, but I don't think it moves the needle on Reliance Industries too much. So the one stock, if at all, that gets impacted out of this data is Vodafone Idea. You got to keep that at the back of your mind. Okay, let's move on. Avenue Supermarts is the most expensive large cap stock. The DMart promoter is trading at more than 100% premium over its FY20 price to earnings estimates for a while now, and the valuations don't seem to be cooling off as yet. So what's keeping investors bullish on the company, and what could the possible way forward be? Agam is here with an attempt to answer that. Agam, good morning.
Good morning, Neeraj. Well, there have been a lot of Twitter spats over Avenue Supermarts and what one should do, especially after we've seen the QIP and the stock has gone up to 2,500 rupees. And, well, debates are now getting that polarized, so I thought it would be interesting to talk about Avenue Supermarts and see what money managers are doing with this one. So let's start off with how Avenue Supermarts has done through, well, 2020 and what is done over, well, something like, over the last 12 months. So over the last 12 months, as you can see, a staggering rise of around 9%. And as far as your year-to-date is concerned, again, it has outperformed a lot of its peers. It's up around 28%. Now, what's really standing out for Avenue Supermarts is that it is the most expensive stock on the AMFI-defined 100 large caps, and currently trades at 114 times the FY20 Bloomberg consensus price to earnings ratio. The only stock which is a tad more expensive than this is Trent, but that doesn't come in the large cap one, which was defined as per the December 31st, 2019 numbers. That was still, in a category lower. Now, the real question here is that a lot of people are of the opinion that, well, Avenue Supermarts, of course, is overly priced. So what we really want to know is that what's happening, and are people really playing for it even at, well, around 2,000 rupees per share, where it was at 93 times, which is also a reasonably high expectation. So, well, we spoke to a handful of money managers, of course, on the condition of anonymity. But what they are actually saying right now is that the 4,000 crore infusion that comes in for Avenue Supermarts, well, via the IPO, means that they can, well, fund their top line growth. This can accelerate further. Let's not forget, Avenue Supermarts is, has been growing. Its top line has been growing at 36% CAGR over FY15 through FY19, and even going forward, we're likely to see about a 26% growth. Of course, these numbers were revised from 22 to 23% before the QIP happened, and this, of course, that means that it is projected to see a considerable high growth. What is also interesting is among the 100 large cap companies, Avenue Supermarts is by far the highest in terms of growth projections over the next couple of years as well. And that's one reason why a lot of money managers are, well, putting their money and betting in Avenue Supermarts, even at 2,000 rupees per share, 2,100 rupees per share. Of course, a lot of other money managers also spoke about the execution and the capabilities of the franchise. This is a company that does not go into a store expansion just for the sake of it or for the growth numbers. They will take due diligence and then think of, well, going forward, which is why, well, a lot of money managers think that the management's capability is, well, equal to or rather much better than some of their peers coming through. And of course, the management track record speaks out there. However, there are few out there who are a little bit well circumspect with respect to Avenue Supermarts, but even they are not saying that you sell Avenue Supermarts. They're also of the opinion that you do a systematic investment approach in Avenue Supermarts, and if on lows and highs, you continue to buy into this one. This is, of course, your analyst ratings. Well, we still have a lot more buys as compared to well, sells or holds, but for now it does indicate a 18% return potential, a negative return potential. So well, some may be suggesting that it's overpriced, but that hasn't kept a lot of these fund managers from buying into Avenue Supermarts in the QIP as well as after the QIP, increasing allocations. So the word on the street basically is that you stay put in Avenue Supermarts, and if you haven't bought into it, you buy into it systematically over the in a staggered way over the period of time.
Well, so the most expensive stock, and yet money managers are comfortable putting in money for reasons that Agam partly analyzed as well. And thanks, Agam, for putting that into perspective. Well, we've seen this, right? We've anyway seen this. I mean, we've been talking about market polarization and how people are comfortable buying. But yeah, at nearly 100 times or thereabouts, for a stock to still attract money and attract money in the fashion that it does is quite something. But while some stocks are doing well and markets are under pressure across the world, as we said, there are some stocks which have not only outperformed this year, but continue to offer significant upside from the current levels. Yash Upadhyay is here with the list. Yash, why right now? What's the basis of this list that we have these Bloomberg target consensus?
So essentially, the broader markets have started to pick up, and we've seen that momentum. The earnings season was also half decent, while most of the companies met analyst estimates or even came in greater than estimates. But as with every day passing on, the concerns with respect to the coronavirus outbreak, they have increased further, and both the Indian markets as well as the global markets, they have come under pressure on account of that. But what we are essentially trying to do over here is look at a list of companies that have not just done well on a year-to-date basis, but continue to offer considerable enough upside even from the current level. So we're looking at large enough companies which have at least a market cap of 1,000 crores. So that eliminates your smaller names, and are also having ample coverage. So that eliminates your low volume and relatively unknown names. But most importantly, they would have gained at least 15% or more on a year-to-date basis, and have sizable upsides based on the consensus target price on the Bloomberg terminal. Now that brings us to a list of about 279 stocks, of which the top 10 stocks are as follows. They include IRB Infra, where the stock has gained almost 27% year to date and still has a 60% upside from current levels. Bajaj Electricals, Orient Cement, Castrol and Dhanuka Agritech being the other key names. Now it's important to note over here that these are not just companies that have gained only 15%. They would have gained 20-25% as well, but because of the recent weakness, they might have seen some amount of correction from higher levels. But analysts overall project that with the structural growth levers in place, if things start to improve from here on or going forward, these would the companies where they would be betting their money on. So let's look at the individual factors working for these companies, and I'll start first with IRB Infra. There was positive news yesterday as well, where they had received funding from GIC after selling a partial stake in 9 BOT projects. They've also secured the Mumbai-Pune Expressway order now, as well as a strong NHAI order pipeline. That is a big positive for the company. Bajaj Electricals, the management continues to focus on their consumer business. Their industrial business has been a bit of a drag, but going forward, both analysts as well as the management say that the consumer business would be the key driver of growth. Orient Cement, this is the seasonal period where we see a pickup in demand because of the pickup in construction activity as well, and going forward, analysts expect the pricing situation also to improve. Castrol is another name where the management said that they are going to focus on volume-led growth, and for the next 3 years they expect to do a 5% volume CAGR, and also this would be on the back of new launches. Low crude oil prices is another positive for the company. For Dhanuka Agritech, gross margins, most of the analysts believe have bottomed out from here, and we could see an improvement. This is also down to stable raw material prices as well as new new launches and expansion into different product categories. For Bharti Airtel, well, most of the analysts believe that the company is well placed to deal with the AGR blow post the series of fundraising and the tariff hikes. It has seen strong 4G subscriber additions, and despite of a weak market, has managed to maintain or even increase their market share. For Gujarat Gas, the NGT ruling has been extremely favorable, and that has seen industrial volumes go up higher. And going forward, their expansion into newly acquired regions, that would be the key driver of growth for the company. Granules India, extremely strong management commentary. They've said that they would do 25% plus top line over the next 2 years and a 20% plus net profit growth, and that would be on the back of strong growth in their formulation business as well as a direct entry in the European Union via its distributor range. M&M Financials, the valuations are extremely attractive and they offer limited downside from here on, as well as the borrowing cost to have improved for the company. And lastly, for Coromandel International, the expectation is that we would see a good Kharif season next year, and that is on the back of the extended monsoons increasing the reservoir levels. They are coming up with at least 4 new product launches in the crop protection business, and lower raw material prices, they are the additional benefit for the company.
Okay, some interesting names. Yash, thanks so much for putting that into perspective. Well, communal tensions playing a role in the sudden spike in stress for microfinance lenders. The latest data released by CRIF, High Mark Credit Bureau, shows that stress was highest in Assam in the third quarter. The state had witnessed a lot of tensions in the latter half of the last year. Shefali Malik is here to take us through the details. Shefali, good morning. What does this note say?
Well, this note is primarily talking about the trends in the MFI business for the industry on the whole for the third quarter. And one of the key things that I picked out from the note is what happened in the state of Assam and Northeast on the whole because of the tensions that we saw. To that, they're pointing out that the portfolio at risk in 1 to 30 days past due category for MFI loans in Northeast India were about 10.4% versus 1.9% for India on the whole. So these are early days stress, that is when one borrows and is not able to pay back within 1 to 30 days. So early repayment stress getting visible in the northeastern region, and specifically in Assam there was a very sharp increase in the same category from 2.3% in the second quarter to 16% in the third quarter. So a very sharp increase. And in the portfolio 31 to 180 days past due, the same for the state of Assam increased from 2.8% to 6%. So a sharp increase there as well. Aside of that, for the country on the whole, in the 1 to 30 days category, the same increase from 1.3% to 1.9%. Portfolio at risk in 31 to 180 days category also saw an increase by 40 basis points to 1.5%, whereas for dues for 180 plus days decreased slightly by 10 basis points from 4.5 to 4.4%. So that's the asset quality picture, because remember in last couple of months there have been concerns around over leveraging, and obviously to top it up the Assam tensions that went on. So there were concerns that this will get contagion and this might lead to a huge spike in the asset quality. To some extent it has become visible this time around. And other than that, the positive side was that overall for the nation as a whole, the MFI loans did see a spike up in Q1 and Q2 of this fiscal year. On a sequential basis, the growth was actually tepid, 2.5%, 1.3%. in the 2 quarters. This time around there was a jump, 8.5% growth on a sequential basis and 26.5% in the gross loan portfolio on a YY basis. Disbursements also jumped 22%. However, the concerns of over leveraging also got visible this time around. There has been a consistent increase in the average ticket size and average borrower exposure. So the average ticket size increased by 10% on a YY basis. And aside of that, one data point that amongst all the entities that lend, that give MFI loans, banks continue to dominate. They're still about 40% of the total pie. And when it comes to growth, again in Q1, like I was mentioning, it was 2.7% on a sequential basis, 35% on a YY basis. So from those 35% level, it has come down to 27% in the second quarter and 26.5% in the third quarter. But on a sequential basis, the growth looked better this time with 8.65% growth.
Okay. Shafali, thanks so much for putting that into perspective. Interesting data. I don't think people can predict, and certainly agencies like CRIF can't predict about what will happen. They analyze the data and give it out as is. But it'll be interesting to see if indeed this tensions result in continued stress on some of these books for the current quarter as well. Time will tell. That's all that we have on First Word today, but lots more lined up on Indian Open. We talk about the conditional relief for Bandhan Bank from restrictions placed by the Reserve Bank of India with Chandrasekhar Ghosh, the MD and CEO of Bandhan Bank. Markets and macros with Rajesh Kothari of Alpha Accurate Advisors. Stress in the microfinance industry with Uday Kumar of Credit Access Grameen. And Casey's international acquired a transmission tower manufacturing facility in Dubai. We talk about the rationale with Managing Director Vimal Kejriwal. But after this break, a full tilt towards the day's trade.